The bell just rung right here on the trading floor, and this is a celebration because EABL has just as well listed their medium-term note, which was super successful and oversubscribed. This conversation will be right here as well. And we have set up to have a conversation with the CFO, Risper Ohaga. Welcome to the show, Risper.
Thank you, Maina.
Yes, as I told our viewers, it's a happy moment. Probably you'll just paint a picture of what has just happened and what are your immediate feelings about it.
Okay.
Yeah.
I mean, the way I'll describe it is you went to school to write an exam out of 100.
Yeah.
And then you got 152. So clearly you're over the moon because you've overachieved.
Absolutely.
Over and above what was expected. And, it's a great outcome and really reflective of confidence in our business, in our message, in our strategy.
Wow.
So it's a really happy time for us.
It's a happy time.
Yes.
And we're having a happy time right here. 16.76 billion.
Yes.
And you've used the word oversubscription there, right there. I wanted to ask you, what do you think drove this strong investor appetite and the results that we have seen today?
I think that there's first a real need for diversification. Investors are looking for alternatives. There's a lot of government paper, which is great. There's some real estate, but what else is there? So I think just getting a good quality corporate paper is always exciting for investors. And I think it also just shows that they're excited about EABL, they're excited about our business, our outcomes. And so when we come out and put out a bond like this one, then, they are very happy to participate. I think also reflective of liquidity in the market.
Okay.
And, people have the money, they're just looking for where to invest it. So again, it worked both ways very well for all of us.
All right. I love that. But I also come from a school of thought where probably some people may agree with me or not, that as EABL and what you offer the Kenyans as well was also an exciting element of it to ensure that we are excited. That's my school of thought.
It's possible.
It's possible, right?
We're an exciting business. It's exciting to work there.
Yeah.
It's exciting to use our products responsibly.
Yeah.
And so it's no doubt a compelling story.
Okay.
But I know also investors there, it's all about the money. Are you going to pay us back? And are you going to pay as well?
Okay.
And I think we answered those two questions correctly.
Okay. Let's reflect more on the investor confidence that you've alluded to.
Yeah.
This being a successful issuance as well. And so it's not only just about investor confidence, but you've also spoken about EABL's financial strength.
Yeah.
What do you see in the broader Kenya corporate debt market? What does that really speak to all this market? Yeah,
I mean, I think we're not yet optimal as a country.
Yeah.
Our capital market hasn't been very deep. We've had some trying times, and therefore participation has been quite low. For us, we feel not only is it a good avenue to raise funds, but it's also a responsibility as a large corporate to make the capital markets more vibrant, more active. Yeah. And so that's one of the reasons we come out onto the market. And then, that enables us to demonstrate that it can be done, and it can be done at good rates, and it can offer also opportunities for others. So I think it's a really good story. If we can have more of that, people have shied away, but we're now seeing people starting to come back into the capital markets.
Yeah.
And it would be good to see them also trading quite a bit on the secondary market.
All right. I love this is the first tranche, and I wanted to ask you about the timing and the structuring behind it. What key considerations were there, and how did you ensure it appealed to both institutional and retail investors?
Yeah, I mean, the timing is always dicey. I think somebody said it's like the sunset. You look at it too much and it's gone.
Yeah.
And so we spend a lot of time doing analysis of the economy. When is a good time? You always try and go in when the market has bottomed out and to get a good rate. At the same time, we had the previous MTN maturing in a year's time.
Yeah.
We use this to cover our long-term funding needs. So we thought it was good to reflect on whether we can come back into the market, get a good rate, and stick it out for a longer term. And so that was the combined thinking of very, very many people trying to pin down the sunset before it goes down. And I do think we did very well.
All right. Still looking futuristic, because you have said that you'll be coming back to the market as well for other medium-term notes. Yeah. I wanted to ask you, with all the stabilization we're seeing in the economy, how do you anticipate this will also shape the demand for the future tranches?
I mean, I think that's always a good thing. When the economy is growing, then, there will be funding available. There'll be investors looking. And you've seen what's happening even on the equities market. The growth we're seeing there is phenomenal. And similarly, you do expect that as the economy grows, then liquidity is available and people have opportunities to invest. So again, for us, it's looking at the opportune timing, and again, aligning our needs with the funding needs and optimizing our funding costs, as well as keeping really good balance sheet stability and reducing P&L volatility. So there are a number of things we look at with that, and ensuring that it's the right time market-wise, but also that it's the right time for our business.
All right. The fans are here. The people have given you the fans in excess.
Yes.
So what's the plan with it?
So I think, whilst we got 16.7, which was great, the program was for 20 billion. We wanted to go for 11 billion, essentially just refinancing what we had before. And that's what we were going in for. And so we came in at 16.7 billion, which was very good. And we feel at a very good rate. And so we picked that up. I always say that the way we think about the capital markets is that we use it for long-term funding.
Okay.
And over the years, we've had big projects. We put up the Kisumu Brewery in 2019. We've put up biomass projects in Kenya as well as in Uganda. And we even put up a microbrewery, which is quite a good innovation lab for us in the last few years. And those are not investments that pay off in 5 years or 3 years. So you need long-term fundings because they're like 50-year investments, and probably they'll pay back in like 10 or 20 years. So just bringing in the funding to keep on having some stable funding on the balance sheet to cover those long-term assets is what we intend to do with it. So ensuring that as the initial funding rolls off, that you fall back on a sizable pool of long-term funding.
No, you're right. And you've mentioned some parts of some of the investments you have done and the likes. We shall have another conversation. We shall go and dig deeper into that. Today's a celebration time for now. Now, with this particular success on this particular tranche, I'd like you to speak to investors. What's your message to them, especially as we look forward to the subsequent board issuance that you shall be coming to?
I think my message, and I always say this, that our market is about yield, and yield is good, but it's also about quality. And I think what we were trying to demonstrate is that a good credit quality company should be able to access funds at a good rate and not just at a yield plus. When you chase yield, sometimes you'll get the yield and then things get shaky. So I think for investors, it's looking at the underlying performance of the business. For us, our leverage ratios are strong, our profitability is growing, we have strong cash generation, our cash flow is strong. So all the fundamentals really speak to a company in which you can have confidence in. And I remember in one of the sessions where I was speaking, and one of the guys asked me, how come it's not secured? And I said, well, even if I give you the factory, what will you do with it? You should have more confidence in the cash flows, my ability to sell beer, collect. And, I collect on cash. Nobody's drinks on credit. Bring it back into the business and continue to generate more sales. That should give you more confidence than the plant at Ruaraka, which you can't take home and liquidate in a day or two. I think it's just that really great appreciation for credit quality, also for security vis-a-vis cash flows, and really just getting our markets to be very, very fine around pricing for those different elements. I think when we do that, even for small players who are sound, they'll be able to access the market and get very good rates. So I think that's what we really need to focus on as we continue. And for investors, I think they'll be able to assess where they sit on the risk profile and where they want to play.
Wow. As they say, if the deal is also too good, you must always be observant to see what's going to keep you awake, because now investors are super happy. They've given you all this money and you have already pointed out where you're going to invest. What will you be watching out for? What will you be watching out for to ensure that you deliver and give them back what they expect?
I think for me, there are a few very critical fundamentals. One is growth. Growth in volumes, we call it liquid on lips, are our customers drinking. And as they do that, then we're able to churn more cash to be able to pay off our debts. And we've demonstrated that. In the last 2 years, we've paid down 20 billion worth of debt. So we're good for it. So that's one, is really being able to support growth. Two is cash generation. how much am I generating from my operations? And am I able then to cover my debt? And we have a number of ratios that we watch. The board holds me to leverage ratios. They look at the net debt to EBITDA. They look at my interest cover. So there's a number of ratios which tell you this company is good for it. And I think it's fair to say that EABL is definitely good for it.
Wow, lovely for that. Finally, I must ask you this question because we're leveraging on what you've done. There's a lot of innovation behind it. And a lot of people, I was talking to some of your transaction advisors, a lot of it just happened online and people were able to do this and close within the short period that was given. We also seen a lot of capital markets expertise to diversify funds and sources and also strengthening long-term resilience to deliver sustainable value to both shareholders and customers. What would you say? How is EABL leveraging innovation to ensure that they continuously keep engaging customers and investors?
I mean, innovation for us is big, not just on the funding side for things like this. One of the things I mentioned is we invested in a microbrewery, which hopefully you'll visit us soon. And it's really a hub of innovation because it's smaller. In the bigger brewery, if you design something new and the market doesn't like it, that's it. You throw away the whole batch. What the microbrewery enables us to do is to test quite a number of different innovations that customers want and put them out there. And if they're successful, then we scale it to the big brewery. And you've seen that with the case of Manyata. Manyata was one of our first innovations in the microbrewery. And we did 4 variants, very successful, and we've been able to scale it. So that's really investing in the future to make sure that we are ahead of what our consumers want and we're meeting their tastes and preferences, and we're even innovating ahead. So that, I think, is a good investment for us, which really keeps us ahead of the game, keeps us growing ahead of market and just being exceptionally successful.
Wow. Thank you so much for your time, Risper.
All right. Thank you.
There you have it. That is Risper Ohaga, the CFO at EABL. And we are very pleased for the oversubscription that they have just experienced and very optimistic of what they will do with the monies. We can't wait as well, even for the next one. So if you were left out, make sure this next time you're not left out as well. I leave you now with the markets. Thank you.